Hello, everyone. Welcome to Always webinar on navigating financial success, strategic finance for building and managing a small business. I am Anam Kamran, founder Always.com, and your host for today's session. I'm thrilled to have Ms. Lareb Muhib with us. She's CFA. She brings a wealth of knowledge and experience in the realm of strategic finance, from budgeting strategies to investment decisions. Our aim is to actually equip you with the insights and tools needed to not only survive but thrive in the world of small business ownership. Before we dive in, a quick housekeeping note. Feel free to submit your questions throughout the webinar using the chat feature or live Facebook feature, comment feature, and we'll address them at the end of the session during Q&A. Without further ado, let's welcome Ms. Lareb and explore the pathways to financial success for your small businesses. Ms. Lareb, please.
Hello, everyone. Thank you, Anna, for such a nice introduction. And I'm really glad to be a part of this session here. And I'm glad the kind of work that you are doing. It's also very, very encouraging to see, especially for women in entrepreneurs. With that. Yeah, so I'll just briefly shut my video so that it's working well, the connection. Yeah, so as Anam talked about, the topic for our session today is navigating financial success, but our focus is today on small businesses and very particularly for women entrepreneurs as well. So what are the kind of strategic finance challenges that are being faced by the small businesses, especially in today's very uncertain world? And what are some very quick and very important ways that you can use to navigate through those challenges? So just to start with this is the agenda for the presentation. I think the presentation will only take around 30 minutes and then we can do any questions if we have time. So just before starting with the strategies or what are the ways through which we can navigate the challenges, I just wanted to briefly touch upon the kinds of challenges or the common factors that people like me and Anam come across when we deal with different kinds of small business owners. What are the issues that are most common? And all these issues are related to your financial planning in some way or the other. And many of you would agree with me when you read those issues on your screen right now. Like, for example, most of the business owners struggle when they want to expand. They're doing very well in the first 1-2 years and they're very successful. But then they hit a roadblock because they don't know, they don't have access to that kind of cash capital when they want to grow, maybe launch a new product or go into a different new market. Similarly, they don't have that kind of strategic planning or vision which will help them to survive in the long run. Like, for example, somebody got a great idea of launching a business and they did that and they got very good returns for the first few years. However, suddenly something happened and they feel that everything is going wrong for them. So, what exactly went wrong? Since they did not have that kind of a long term vision, maybe not for all, but maybe in some cases, their businesses fail to survive. And in many cases, Anam would agree with me, issues are somewhere related to the financial aspect. Something went wrong with the price, or something went wrong with the revenue, something went wrong with the very fixed cost or variable cost. Something happened over there. Maybe they took a loan and they could not pay back that loan, or they just don't have any more savings. So so to, so we'll try to understand why does that happen. And I personally have seen in most cases that there's a lack of homework. Now, when lack of homework means, it doesn't mean that the idea is bad or the business or there's something wrong with the business. It basically means that there's some lacking in the way the business is being managed. Either it's not too organized or it is not in the registered domain. So we'll talk about it a little bit more, and it will be clearer to you then. And I've seen a lot of people getting affected by the peer pressure. Like, for example, nowadays, we see almost every small business focusing on Instagram or on social media as a digital marketing tool. but they don't, and they're spending millions of cash on that as well. It's not free. Social media is not free, right? But so just because everyone is doing it, they also start doing it, or they feel if they're not doing it, their business will fail. So all of these factors have an impact uh, on your uh, on your financial performance, all of these factors. So I want you guys to understand that some of these are the factors and they all are related to your financial performance. So the next question, just to summarize what I just talked about, small businesses have to face tough policies. So when I compare a small business, a small shop or a small e-commerce business with a large multinational corporation, the policies are tough for them because the governments are not thinking about them as much as they should think about them in most countries, maybe more in developing countries, but in developed countries as well. And they have to pay taxes, so the burden on them is higher as compared to large companies. Then, like I talked about, they don't have access to unlimited amounts of capital. They just can't go and walk in the bank and the bank will give them loan. They face a lot of issues with that. And the business environment is becoming tougher day by day. We literally have two wars going on in the world. So all of these factors are affecting my business, your business, every small business or large business. So the competition is so tough. So the financial planning is becoming more and more imperative. And on a comparative basis, this might not be true for all, but in some cases, we've seen that there's a lack of technical knowledge or lack of important concepts which small businesses have to work on and they should work on as compared to large businesses. So this is the challenge. I just wanted to highlight a little bit about for our women audience mostly, that although women they have a small portion as compared to the other gender in the business world, but now they are also coming into non-traditional sectors. They have all kinds of business, whether it's finance or economics or fashion, anything. But the challenges are much more severe for them as compared to uh, men, because they have to overcome other social barriers also when it comes to uh, taking out a loan. This might not be very true for all the countries, but in most cases we see that the challenges are much more severe. There's a gap. I think for women entrepreneurs, it is even much more important to properly plan their business financially. So we think that this is much more important than men. So just wanted to highlight that. So now, after knowing what are the challenges and what are the issues that we all are facing, what can we do? How can we make it better? So I have divided this into four parts. First is you plan, then you invest, then you adjust and grow simultaneously. So I'll briefly touch upon each of those four factors, and then you can see what I mean by that. So first we talk about the planning stage, which I think is the most important phase, and it is the major chunk of the part. Although many people feel that you can't always plan everything and you can't spend too much time planning, you just have to act. But I think sufficient planning is the backbone of any small business because of the challenges that I just mentioned. So when it comes to planning, what should be the first thing? The first thing should be that every small business, as a business owner, I need to know what is my risk level. Now, Anam, for example, might be an aggressive person as a business owner, or because she thinks that she can, she wants to just grow very fast. Like she wants to be in 2 3 market segments, she wants to have 5 product lines, she wants to make ₹1 billion in 5 years. But on the other hand, I might not be like that. I think as a business owner, I want to take it very slow. I want to be slow and steady, so my risk level is not that high. So I need to be very clear about my risk levels. So the first thing that you need to do is, as your financial planning processes, you need to gauge or measure your risk level. And it depends on the kind of business that you are doing. Like for example, if I run a marketing agency, my risk level would be aggressive, because marketing is much more aggressive and fast trending as compared to if I run a school, if I manage a tuition center, if I manage an online education school, then I might not have to be that aggressive. I can be a little bit conservative. So it depends upon the kind of business that you're doing and the kind of person you are. So you need to know your personality level as well. So if, for example, if I'm a cook, I have a cooking business, or I have a cooking YouTube channel and it's my business, right? So you need to be very clear and set a clear risk level uh, for yourself. second step is the goal. Now, although most of the people, when they're starting a business, we all want to make money. That is what I want to do. My job is to uh, basically make money, right? We all want to make money, but that's not enough. As a business owner, I have to identify my financial goal. Now, by financial goal, I mean, do I need to just make money to meet my daily expenditures, or I have a long term goal? I want to make so much money that I want to be in another country by the next 3 years with my product. So, like, I run a consultancy, for example. So my goal is I want to make this much cash over the next 1 year, that by this end of the second year, I will be able to launch another kind of service. So what is my goal? Financial goal, not just random goal. What is my financial goal? So unless you're clear about your goal and your risk level, you can never have a proper financial planning process in place. So I've met so many business owners, they're running successful businesses, but when I ask them, spell out your goal, they don't know. They have not written it down anywhere. So I always suggest them, no matter how technical you are, how successful you are, you have to write it down. You need to write it down. What is your short-term goal and what is your risk level? So moving on, just to not after knowing these two things, this will lead me to my financial goal. So the financial goal means that I need to have a very clear, measurable number in my mind, and it needs to be time bound. Like, for example, first I need to have a macro goal. Like, if this is my financial goal, that I have to earn 10% profit every year for the next 5 years. This is a macro goal. Like, I want to make a net profit of 1 billion rupees by the end of 5 years. This is my macro big goal. Now I have to divide it and break it down into minor goals. Now, how do I achieve that 1 billion? I want to improve my revenue, and by revenue, I mean my sales. My sales by at least 25% by the end of the year. So you see, the language is very specific. I have to define the time period, I have to define the numerical value, and I have to define the item that I'm talking about. For example, if you see about US economy, the US economy is struggling because interest rates are high, and the economy is in a recession. So at that point, my micro level goal should be that I want to cut my operational cost by 5% every year as compared to previous year for the next 2 years. So I have to be that level. I have to have that level of clarity in my goals. So so just to make it simple, it should be measurable, it should be reasonable, and it should be time bound. So you know your risk, you know your goal, and now you know your target as well. This is your financial goal, or you can say financial target. So this is the first part of the planning stage. Now, after you have done that and you've launched your business, you need to set a budget. Now, this is not very something new. I think a lot of people know that, and many small businesses and many owners I know are making budgets. They have that in mind. Like, I have a budget of 100 million rupees, and this is what I have, and this is what I have to spend. But when I ask them, do you have a line by line budget, or do you have a proper Excel sheet for that, or are you using any software for that? So most of them say no. So I think this is an area which you need to spend money on. You need to get a financials, you need to get a very easy, very cheap, maybe if it's too expensive for you, an online software, or just use Excel, right? This is a format that I'm sharing with you, a very basic month by month budget that you can make easily by yourself. You can get an employee to do that for you. But you need to understand that your budget needs to be set and locked. You can't change your budget all the time. Like, you make your budget and you fix it, like, and you cannot change it. And then at the end of the year, or at the end of the month, you will then eventually compare your performance. So once you have a budget, you compare your performance and you see, how did I do? So you need to know your fixed costs, your variable costs, your revenue, and you need to forecast as well. Like how much do you want, how much are you expecting to sell, how many units you will sell, how many hours you will provide service for, what will be your profit. So the forecast is very important, and it's very simple math. You can do it very easily. Just apply simple percentage, and there are easily so many softwares are available. You can automatically do it. You don't have to spend too much time on it, but it should be there and it should be logged. So once you have done this, uh, then you are set, and you can do it any time of the year, even if you are already in your business. There's no hard and fast rule. Any budgeting can be done anytime, but you have to lock it. You lock it for a month, or you lock it for a quarter, or you lock it for a year, and then you compare accordingly. Uh, so eh, so when it comes to strategic finance, I think one advice I always give to my clients, or people I meet, that, or even if you're not a finance person, even if you're not an economics person, you need to have knowledge. You need to know some key terms, right? You need to know about the gross domestic product. You need to know about inflation, about interest rate, about exchange rate, because these things affect your business. They affect your money. They affect your cash. They affect your profit. So how can you navigate through them if you don't understand them? Like for example, the inflation, we hear it every day on TV, on our mobiles, everywhere, that there's too much inflation. There's too much inflation. Now, what exactly is inflation? How is inflation affecting me? Maybe I'm better off. If the prices are rising in the economy, I am able to raise my prices. I'm able to sell at an expensive price to my customer. So this should be a good thing for me, right? But why is it a bad thing? Is it a bad thing because nobody has the money to spend anything on, because people are suffering and they can't buy anything? So so what is exactly that damage? Is it a good thing for me or a bad thing for me? So unless you don't know it, you cannot navigate through it. So for example, interest rates. If interest rates are increasing in the economy, and you know that it is going to further increase, then you make the right strategy. Okay, I have to cut down my prices at least by 10%, because there's so much inflation. So I have to survive. How will I survive otherwise? So you need to get a mentor, maybe do a short online course, even if it is not your field. But as a business owner, I think this is something which you should understand, some basic key terms and the impact on your business, because every business is affected differently. The last part in planning is the business plan. Although I think a lot of people say it's too much work, and we have to write so much pages and we have to make so many documents, but I think it's we have ready-made templates available. You just Google a template and just put in the information in that template. So financial planning is one part of that business plan. But this business plan is your bread and butter, because when you're going to a bank to get a loan, you have to give a business plan. When you go to a fund, when you go to a venture capital fund, or to a startup agency which can give you funds or grants, you have to present a proper business plan. A business plan is something which makes me understand what is the owner's perspective, what does the owner want to do, what are exactly his plans. Should I invest in that business or not? If I am an investor, I want to see the business plan. I want to see whether I should put my money in this business or not. So a business plan is the most basic thing, and you can learn it online. And you can, even if you have the resources, you can hire a consultancy and they can make it for you. So financial plan or budgeting is a part of the business plan. So like I said, this is just to remind you guys that inflation is not only for common people. It is actually very relevant for the businesses, and businesses suffer because they can't anticipate inflation. It's not always a good thing to have inflation for businesses. So understand what these factors are. Now, one way to understand and one way to navigate through inflation is cash management. So always have an emergency fund. You should have an emergency fund. So again, it all goes back to, if you have a proper budget in place, you will know. So you need to have an emergency fund. You need to have tax planning. You need to hire a tax consultant if you can. If you cannot, you need to know what are the taxes that you have to pay and how can you better manage those taxes. And there are certain tools for that. You can use mutual funds, because they also help you save taxes. They have strategies. You can go to a mutual fund. You can give them money. They will invest it in a stock market fund. They can invest it in a bank. They can get you different bonds. So you need to have a proper cash management strategy. Whatever that you are saving, you need to save it and and invest those savings somewhere, because there you can use that money to further grow and spend money on advertising, on marketing, on whatever, on getting a software. So, cash management should be an important part. So this was the part where you discussed about planning and first we talked about the plan, and now we're talking about invest. So after you have done all the planning, you have a clear budget, you know your business very well, you have a business plan, you know your risks, you know everything. So how can I, from where can I go and get a finance? This is a very common question, especially for women entrepreneurs, because they don't have, many of them don't have bank accounts, they don't have savings of their own. So they struggle, where should we get the money from? So, so for small businesses, bank loans are very difficult, because banks have very tedious requirements about their businesses. But you have to give them financial statements, you have to get their audited financial statements, and their requirements are very tough. The best option is that you use your own savings. You set a certain target and you keep on saving every year. And after 5 years or 6 years, you will have so much money that you can use it to invest and further expand your business. If that's not the case, the second option is you can go to a venture capital or a startup funds. There are very specific programs by international banks, by World Bank, by IFC, by different corporates, and they invest in small businesses. So you can go to them, you can give them your business plan, and then you can pitch your idea to them. And if they're interested, they will invest in your business. Obviously, there are so many other factors, and this is out of the scope of this presentation. But you can always contact me, or you can contact Anam if you want to, if you're interested to know more about this. You can also get government grants. I think almost in all the countries, there are very specific grants that are being offered by women, to women by the government, and even for the even not only for women, for all kinds of businesses. So you can get government loans, cheap loans at a very low cost, and you can, for small ticket size also. You don't have to get big loans. You can get small loans as well. There are many NGOs, there are funding agencies. Uh, One option is which you can use is to sell a stake. I think I always advise women, especially, to use their existing network, connect with people, talk to them, because women have their own ways of connecting and interacting with each other. So build connections. Networking is very common and very important. So you get along with like-minded people, and you start to bootstrap. You start pooling money together, or you can make a joint venture. So no, you can use your existing resources. If you have existing land available somewhere, if you have inheritance of inherited land, if you have furniture available, equipment available, be smart. Use your existing resources as much as possible. you know Try to be innovative with that. Use community model, which are very women oriented. I think instead of going to a bank, you can just use your connections to get partners. That's the best way to move ahead. And you have government sponsored schemes and crowdfunding programs. So these are some easy options, better options, and compared to getting a loan from a bank. So very briefly, these are some important terms that you can also, all the time is a little short, so we can't get into detail of all of them, but you should know some of the terms as a small business owner, from a financial perspective. Like, what is your gross margin? What is your customer acquisition cost? How much money do I need to spend to get one customer? So one new, how much money do I need to spend to get one, to retain one customer? Burn rate, how much cash am I burning every month, every year? How much cash am I spending? And the return on that capital. You need to be very careful about the return on investment. If you've invested, you can't just keep on investing, and burn rate cannot be too high. So all these factors are related to each other. But unless you are not keeping a track of these financial numbers and financial metrics, you will be lost at some point. So these are very easy calculations, and you can easily find them. If and you can have sessions online with us as well, with online that can help you find these numbers. And you need to know how much you're earning based on how much you've invested. So if your burn rate is too high, for example, if you're literally burning cash, but your revenues are not increasing, your sales are not increasing, then you are in trouble. So you will have to either go to a bank immediately, or you have to go to find a partner immediately to cover up that. So, and as the economy will change, the numbers will change. So this is a constant process. You have to keep on doing it every month, or every day even. And for that, you have technology. So, like I said, you have built-in software available now, and you have to spend money on that. I would always recommend, and you use Excel, you use software, you use technology, and then you keep on monitoring your financial performance every month and every year. Risk analysis, again, no business is safe. There are risks involved. So you need to have a risk framework. This is a sample risk framework which I have given over here. And I think so you can use this one also. And there are many other kinds of frameworks. So you need to understand what type of risk is there, what is the level of that risk, and how can I reduce and mitigate that risk. And this is different for every business, for every kind of business. So unless you need to know this, because this will directly impact your financial management and your challenges. So we can also help you with this if you want to know about this in more detail. Like again, like I mentioned, use technology to be financially smart. The available software is available. Try to use techniques like work from home, use more social media, use more online channels, so you can easily cut down your costs. You can be more efficient and more productive. Use solar power. Don't use normal electricity to cut down your costs. And then registration of the business. Most this is a very common question. I'm sure Anna would agree with me. People get countries, people don't register themselves that much, but we always recommend that you need to register your business, because this helps you get more credibility. This is more reliable. You are able to get access to banks. You're able to get access to funding, and you can even get you can get tax benefits, tax incentives if you are registered. One last, you can get listed on the stock exchange, but these are different types of businesses that you can use. You can be a partnership, you can be a proprietor, so that depends. Debt or equity, which is better? This is a very technical, this is much more in detail. We can't discuss everything in this session, but equity is simple. If you want somebody to be a partner, you can get equity. But if you just don't want anybody to interfere in your business and just want to be more independent, you want to just take out a loan and you want to run the things the way you want to, so debt or equity is the option. This is again a comparison of what kinds of methods are existing, structures that you can use to do that. um, how can you register your business actually? So uh, these are some of the websites that you can use if you want to learn about financial modeling, about budgeting, about investments, about cash management, about just to know about economic concepts as well. So you can use these online channels also. So I think that's it from my side. Uh, we've finished in time, I think.
All right, Larev, thank you so much. It was really, really insightful. I don't want this session to be ended. Please do share your email address or from where we can find you online on LinkedIn or Facebook, whatever is convenient for you, so that if anyone want to connect with you even after the session, they can.
Sure, I'll just write it down in the chat box.
Sure. And then we have some questions. There are actually a lot of questions, but we'll see how many we can address. So are there any specific financial strategies tailored to address challenges faced by women-owned businesses?
I think the most typical challenge which women face is the access to finance. They don't, when they go to a bank, banks don't entertain them that much, or they believe that women businesses are not that successful. There's a perception problem in most areas. So I recommend, like I mentioned in the slides also, women need to understand that they need to cash on their existing strength, which is networking, right? We network, we have partners. So we have like-minded people, we have a communities that are they can help each other out. So that should be own existing network, and you have to use your existing resources. For example, if you get more, like I see a lot of women who have inherited wealth or maybe gold in some form or some other asset that you have. So you can actually use that also. If that also is not working out for you, then I think the best option for them is to go to women specific sponsored programs. You have government programs and you have programs from the commercial organizations, and they're only targeted towards women. So that is the success ratio is very high for them because the competition is not that high when you're competing with only women. So I think these are the better strategies if you are a women-owned business that you can use.
Awesome, awesome. The second question I think you have addressed, but see if you need to add something in it. What tips do you have for effective budgeting in the early stage of a business?
I think the early stage of the business should be the first thing that you should be budgeting is your capital. How much money I can put in for the next 5 years. You need to have a 5 year plan because if you're serious about your business, then you need to have at least a 5 year plan or not 3 year plan maybe, but you need to have how much cash I have even if nothing happens, I'm not able to get any funding. So how much cash I can arrange on my own for the next 3 years, and keeping in mind I have to have a certain emergency fund. Like I mentioned, you need to have an emergency fund also. So that is the first thing that you need to budget in the early stage. And secondly, the the budgeting tip would be plan your main costs. Like for example, what is my main cost in the start? Like is it the technology cost? I have to use Zoom, I have to buy Zoom, I have to buy something, I have to buy an office. So what are my major costs in giving out that service or product? So you need to be very clear because only then you will be able to actually sell at the right price. Otherwise, you don't know how much you need to sell. So I think these are 2, 3 things that you can use. Make a very basic, small Excel sheet and start with that in the early stages, I think. And you can always, I always recommend that go to an expert and make them have a look at it, you know, get an opinion in the start. Because people normally what happens is they've already wasted their money and then they go for expertise advice. So I always tell them, no, go to an expert in the start, make them vet it for you, and then you put your money in.
Yeah, perfectly said. In fact, with my own experience, I can vouch for that, that having an Excel sheet, even if it's basic, if you have projections, your KPI metrics in place, it helps you a lot, a lot. I mean, you can actually avoid the friction period of your early stage by having these projections in place. All right. So next we have someone is asking, as a woman entrepreneur, how can I effectively manage the intersection of personal and business financing?
So I think if you're talking about personal and professional intersection, so I think if your business is small, you're just starting out and you know it's like I'm doing it as a side hustle, maybe I'm doing it as a side business. So you can merge it with your personal financing. Like for example, you go and you open an account with the mutual fund and you have your own savings there, and whatever extra savings that you have, you take out the money from extra savings from your personal account and you can use it to in your own business. So that is fine, but I think there should always be a gap between your personal and your professional financial planning, because you know you can't always keep on putting your own money, right? At some point you would need, I think the best strategy is to get a partner and work with them and keep it separate. uh, at least after a year or so you have to have a separate bank account. Don't use your personal account for your business transactions, because then there's no planning, the planning becomes very difficult, you know. So keep it separate. That is my strategy. But if you are in the early stages, you can use your cash management, like open a bank account, save it somewhere, get extra profit on it, and you can use it for your own business, you know.
Yeah, yeah, right. And with that, there comes a point in my mind because I've seen this practice a lot in our industry as well. I mean, within my within my circle of women entrepreneurs, they don't think about pulling out their salaries even after 2 years or 3 years or maybe 5 years. So, do you think it's a good practice to let go of your salary? Even if you are the owner of the business, you should be having, I think you should be having some percentage of the earning
Yeah,
or profit as your salary.
yeah. So normally they don't they always that is the point, if there's same account, then the money gets mixed. So there's no, there's no line over there. So, you don't know how much profit I'm earning, how much I'm spending. Either I'm spending all of it on my own, so I always advise to keep it as separate as possible if you're a serious business person. Initially you might not realize it, but once your business starts to take off, then it becomes very difficult to keep it separate. So I think you should keep it separate as much as possible.
Yeah, very well. Um, so next is, please share some easy tools and softwares for a non-tech business owner. I mean, someone who is not pro in using softwares.
I think firstly, for people, anybody who's non-tech, like I am also non-tech, if you ask me. But I think Excel is my life. I use Excel for everything. So it's not that difficult to use, and it's very easy. And people underestimate Excel. I think it's a brilliant tool on its own. You can make graphs, you can forecast, you can everything. So if you can learn, do a short course or whatever to Excel, this is one recommendation. And even if you are if your business is a medium sized business also, and you have a lot of the transactions happening, then I think I recommend always using you have QuickBooks. Very easy, it's an accounting software, but it's very easy and very cheap as well as compared to other accounting software, so you can use that. So QuickBooks is one, but I think for a non-tech person, Excel should be good enough,
Right,
to manage.
right. And I think since you have mentioned about the crowdfunding part in different options, so somebody asked if we have such options available in Pakistan.
I think crowdfunding it's still in a very developing stage in Pakistan, to be honest. It's still very early, but I think that we have communities now growing, and I think people like you are developing communities, and we have some platforms where we can start that. But I think it's still in the early stage, because in Pakistan, internationally it's very common, but in Pakistan it's not. So I think mostly in Pakistan, I would still recommend that you go for partnership, to go for get a proper partnership done. And even if you're partnering with somebody, I think it's very, very important to properly legalize it, get a legal partnership agreement. By partnership, I don't mean that you both of the friends are working together and you putting in money and that's how you do it. I mean, people do it like that,
Yeah.
but once it's not very professional, because when you go to a venture capital for funding or to a startup fund, they don't like it that much. The thing is very unprofessional.
And things also
So
gets messy in this way. I mean, you never
yes,
know.
you never know what can happen exactly.
Yeah. All right. And that concludes our webinar on navigating financial success, strategic finance for building and managing a small business. A heartfelt thank you to our incredible speaker for sharing her expertise and insights today. I hope you audience have found this session as informative and inspiring as I did, because Lareeb have explained very difficult things in a very polite and very easy and very humble way, so that you can absorb. At least I did. Also, I would tell you, the audience, that the journey to financial success is ongoing. I mean, it's not just at the beginning. And the knowledge gained today is a powerful tool on our entrepreneurial journey. If you have any launching questions, or if there is any specific topic you would like more information on, feel free to reach out to us after the webinar. If you want to get connected with Lareeb, or you want to have her session maybe again, we can pull her off. We appreciate your time, Lareeb. Thank you to our audience as well. Stay tuned for more events from Elevate, and we look forward to connecting with you again soon. Wishing you all continued success and prosperity in your small businesses. Thank you, everyone, and have a wonderful weekend.
Thank you, Lafis.
Lafis.